despicable. I want to bring in Walser Wealth Management President Rebecca Walser. Rebecca, just your thoughts on this, the way this bailout has been handled and the communication. I'm not even sure Janet Yellen has hit every angle on this. I'm not sure if we're supposed to pound sand or feel comfortable if you got more than $250 in the bank.
Yeah, well, I think the way she handled it when she first came out over the weekend before it happened, the Friday, the Monday, and she said, no, we're not bailing them out. And then basically Biden comes out before the market even opens and says, not only are we going to bail them out, but we're going to make them whole, which was like, wait, whoa, that's something different that we haven't seen. And then we got in that hole. The public finally realized, oh, there's this systemically important bank, that could basically cause problems if it fails. Then she goes and testifies before Congress and literally tells the Senate Banking Committee, no, we're not going to bail out all of the regionals. We have to make a determination on a case-by-case basis. Right. Now we're choosing winners and losers. Right. And this is a recipe for disaster, Charles. You can't run a banking system as large in the United States in that kind of hodgepodge fashion.
And to that point, here's two things. First of all, Silicon Valley Bank was not systemic. It was not going to be a systemic problem.
It was
and by the way,
venture capital.
they did close the bank down. It was the depositors that they bailed out.
Exactly.
The top 10 accounts, $13 billion. Secondly, when Janet Yellen did that, people pick up on everything. Essentially, she was saying, take your money out of a small bank and put it with Chase, because we'll never close Chase down, and we'll cover everyone at Chase, but not everyone in your local hometown bank.
And what sense does that make? Like, let's not distribute risk among thousands of banks or hundreds of banks. Let's distribute risk among 8 globally, systemically important banks that are U.S.-based banks, or 6 or whatever. So let's concentrate the problem. How does this make economic sense at all?
So the CEO of Blackstone, Schwartzman, says, okay, this whole thing happened because of cell phones, right? Mm-hmm. Social media. You had Ackman on social media.
Yes.
You had Thiel on social media. Does that mean? Do you worry that kind of public relations pressure could change policy for other banks or other financial situations?
Well, they certainly were talking about, like, we had Democratic congressmen saying, can we censor social media so that people don't worry and it's not going out there in media about the banks? Charles, we have a by definition fractional reserve system, which means banks are insolvent. By definition, we know what gets deposited does not stay, it gets lent out.
Right.
So if the public really understood this, and if the public looked at the November of 2022 FDIC meeting where they talked about bail-ins and that the future looks like a bail-in, not a bailout like 2008, 2009, too big to fail, and TARP, then that's where they'll get scared. So that's what they're trying. They're trying to keep that message from the average American, because if they realize how it all works and what's going on, they might be a little bit concerned.
I got to tell you, you were concerned.
Yeah.
Before everybody.
Yeah.
Last year, you came on over and over again. You were taking very cautious positions.
Yeah.
And what everyone's doing now, money markets, CDs,
gold.
T-bills, gold, you were doing that. So your clients are well positioned.
Yeah, we did great last year. We told our clients in November 2021, we said, look, we see a mean reversion year, nothing else because of too much stimulus too fast. But then all of the other things happened. Russia invaded Ukraine, switched out of everything popped off after that.
So will it get worse then?
Charles, this is going to be one of the biggest economic years in the history of the world. So yes, this is coming. This is really coming.
It's great to see you in person.
Good to see you, Charles.
Thank you so much.
Thank you.